Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, May 11th, 2021. At our top story today, credit card confidence climbs in April. Well, joining me now to discuss this and a lot more is LendingTree's Chief Credit Analyst, Matt Schultz. Matt, great to see you. Thanks so much for joining us on the program this morning.
Thanks for having me. I'm happy to be here.
Yeah, it's great to talk to you and the folks at LendingTree. You know, credit cards, we were talking offline, credit cards, really important part of the American economy. And it looks like, based on the numbers from LendingTree, that credit card confidence really has climbed in April. What can you tell us?
Yeah, it's been this weird thing that we've been keeping track of. It's been strange in the past year during the pandemic that while you may have expected, at least initially, for folks to be less confident about paying their credit card bills, we actually saw it climb for most of 2020. And, you know, that's for all the reasons you might imagine, the reduced spending, the government stimulus, and that sort of thing. But even still, it's pretty interesting that it still climbed. And it was a little bit up and down for the past few months, but we have seen it start to rise again in the last couple of months. And that, I think, is a pretty good sign for positivity going forward.
Yeah, and look, I mean, people feel better about themselves, both personally and on their credit. They're going to be apt to spend and manage their credit debt. They're going to be out spending money, and that bodes really well for the U.S. economy, the global economy. Are there when you looked at the data, Matt, are there particular areas, for example, women or certain groups of population that did better or worse as a result of this pandemic?
Well, it's no secret that women have been hit really, really hard, in particular in this pandemic economy. And we've seen that a lot in our credit card confidence numbers. But the good news is that in recent months, we've seen that gender gap in credit card confidence shrink a little bit. It's still there, and I suspect that it's going to be there. But we have seen it shrink a little bit. And I would suspect that that has a lot to do with the recent stimulus payment. And it'll be interesting to see if that gap remains as small as it is in future months as the impact of that stimulus payment starts to fade.
Yeah. One of the things there are many really good pieces of information. I encourage people to really check out this report. But, you know, it said 44% of cardholders expected to pay off their account balances. And look, it's a great way to avoid interest charges. That says a lot to me. What does it say to you and the folks at LendingTree?
It says that people feel pretty good about their financial situation. You're never going to have a time where everybody expects to pay their credit card bill in full. It's just not how it works. But the fact that that many people expect to pay their balance in full is a good sign, and hopefully those numbers will continue. It'll be interesting to see how things go once things return to normal, once people start spending, once that savings cushion that a lot of people have built up starts to fade. But for right now, a lot of people feel pretty good about things.
And how does this translate, or does it translate, for example, to our credit score? Something we talk about often on the show, you know, making sure whether it's Experian or the other agencies that measure this. Have you seen, or has LendingTree, not you in particular, but as an analyst, have you and the team seen increases in credit scores, downgrades in credit scores? I imagine it's, does that correspond with the confidence that people feel?
It pretty much does. We have seen numbers, I believe they were from Experian, talking about how credit scores in America are now actually at an all-time high. I think the number was something like 710, 711, which puts people in a pretty good position. It would be better if that number was 15, 20 points higher, but still, given that we're coming out of one of the worst economic situations in the history of our country, it's pretty wild that credit scores have gone up. But when you break it down, it makes all the sense in the world that they would have gone up. When you think of the fact that so many people got deferments or forbearances on mortgages, student loans, credit cards, other things, and there were no late payments being recorded to the credit bureaus in a lot of cases. That's a major factor. But then you factor in the government stimulus, extended unemployment benefits, reduced spending, all of that. And it's kind of this perfect storm that ended up lifting everybody's credit score to new heights. How that's all going to look once all of those forbearances and deferments play out and people need to start paying their bills regularly again is anybody's guess. But for right now, scores are pretty high.
Yeah, and I'm hoping that people, that there's some financial lessons that can be learned here in terms of budgeting, maybe saving a little bit more, all those kind of things. I guess that's maybe a pipe dream, but you hope that people don't get back to the same practices before, maybe where they weren't saving or they weren't paying off their credit card debt. Last question for this segment, Matt. Interest rates. Where does kind of the Federal Reserve language, on interest rates, how does that play into some of how you view this information, or does it?
It does a little bit. The Fed has a huge impact on credit card interest rates, obviously. When the Fed raises or lowers rates, the average person's credit card rate goes up or down by the same amount. And generally, credit card interest rates don't really move all that much unless the Fed is making a move or there's some regulatory change that kind of shakes things up a little bit. But there's no question that interest rates play a major role in how people feel about their credit card debt. And the good news is that people don't need to wait for the Fed to get their rates lowered. They can either look at a 0% balance transfer card or a low interest personal loan to help consolidate things. Or they can even just pick up the phone and call their card issuer and ask for a lower APR. One of the surveys that we do regularly and that I've done for many, many years now is asking people if they have asked their card issuer for a break on things like a waived annual fee or a lower APR or a higher credit limit. And the truth is that people always are more successful than most people think they will be. And our latest survey showed that about 83% of people who asked for a lower APR in the past year got one. So it's a really, really significant thing. And obviously not everybody asks, but that success rate is high enough to where it shows that you don't need to have a perfect credit score or perfect credit history to get some real help on that APR.
Yeah, as I think my parents told me, if you don't ask, you don't get. So better to ask and be told no, or than not ask at all. Matt, I want to take a very quick break. When we come back, we'll talk more about credit card confidence growing in April. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score, a credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're joined this morning by LendingTree's Chief Credit Strategist, or Analyst, I should say, Matt Schultz. Matt, thanks so much for staying with us this morning.
Thank you.
Yeah, really great information. Good to chat about this. I want to ask you just in general about, LendingTree is in a lot of different aspects of financial services in terms of lending, mortgages, car loans, et cetera. Anecdotally, you don't have to give me the stats if you don't have them, but are you seeing much more interest in things like mortgage buying a car if you can find either a house or a car right now, because supplies are tight in both cases?
Yeah, we're definitely seeing a lot of consumer demand in a lot of ways. Obviously, refinancing mortgages has been a huge business for the last little while because rates have been so low. I even did it myself and saved a good bit of money. But we're also starting to see demand perk up for things like personal loans, and we're starting to see credit card issuers kind of get back into more lending, to more interest in lending after kind of really retreating an awful lot in the early days of the pandemic as they tried to figure out what the heck was going on and how they were going to continue to make money and understand who was creditworthy and who was not, as unemployment was shooting through the roof. So we are definitely starting to see things emerge both on the lender supply side and the consumer demand side. So it's a really interesting time.
And when it comes to credit card, let's talk about credit cards for a second. Before the pandemic, there were travel perks, there were gasoline perks, there were perks if you bought groceries. Given the circumstances, when you take into light the confidence, do you believe, or what are you seeing in terms of some of the newer credit card perks? Are people going to travel as much? Are they going to view that as a real positive, or do you think that credit card companies will have to shift to how they reward consumers for spending using their card?
We definitely saw a shift in the pandemic away from travel stuff and more towards things like groceries, takeout, streaming services, that sort of thing. All of the things that are going to be remembered as the telltale things from the pandemic when we were all just stuck in our houses. But as things emerge and things return to normal a little bit very slowly, we're definitely starting to see credit card companies going back to offering more sign-up bonuses that are travel related and returning to a lot of the perks that they used to back in 2019 and before the pandemic hit. Because the truth is that card issuers love it when people travel, because these card issuers have big deals with hotel chains, with airlines, and they know that travel generates an awful lot of spend. And when people spend on their credit card issuers make money regardless of whether they carry a balance or not. So ultimately, I do think we're going to see an awful lot of people get on planes and get into hotels, certainly by the end of this year and into next year. And I think that's good news all around for the credit card space.
Absolutely. I think any return of normalcy, no matter how it looks, if it's a hybrid model, is a great thing. Last question, Matt. We've been covering cryptocurrency, digital assets. I know that I think Visa purchased Plaid, but in terms of cryptocurrency, where does that fit into all this, or does it fit in? To the credit card, the digital asset conversation. Do you see that play out in any of the surveys or any of the analysis that you and the team are doing at LendingTree?
We haven't done a whole lot of polling about crypto, at least as it relates to credit cards, but it's definitely starting to make some waves in the credit card space. You're starting to see some cards that are coming out that are talking about crypto, whether it is getting rewards in crypto or whatever. And I think that is something that we're definitely going to see more of going forward. Like any business, like any industry, the credit card space is very much kind of a copycat sort of business. So what works for one is probably going to be copied by others. So I would suspect that we will certainly see more of the crypto, more crypto involved in credit card rewards and being pitched as kind of a differentiator for credit cards going forward.
Yeah, this is an evolving world, and I think for many of us that are not institutional in nature, we're kind of seeing this thing emerge. Bitcoin, Dogecoin, Ethereum, and you're looking and seeing it's more faster, broader, mass appeal. So it'll be interesting to watch this as well. Matt, we're going to have to leave it there. Really appreciate you coming on the program, and great analysis as always. And thank you so much, and look forward to having you back very soon.
I enjoyed it. Thanks for having me.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for another exciting edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a tax doctor now for a tax emergency analysis.
Call 800-224-6439.